So this is a continuation video of this fund flow statement. That is a previous video we just saw what is fund flow statement and we saw problem number 1 and problem number 2. So that is the concept how a fund flow statement problem should be solved, and that is what, see, that is going to be repeated in all other sums. So what I'm going to do here is I'm going to explain you all the problems and I'm going to explain the solution too. So what you're going to do is you're not going to take down when I'm dictating. I'll just when I'm showing the problem itself, just pause the video and take down the notes so that it will be we can cover the solution, like we can cover the problems very soon, because it will take so much of time like to solve all the problems one by one. If actually, to be honest, if I ask you to solve all the problems also, you can solve now, because this problem number 3 is ditto of problem number 2, like without any changes. See, all three, like depreciation 10,000, 20,000 has been provided. So depreciation account, you should take it to P&L account or appropriation, and also you should deduct it from the plant account. So next is interim dividend. Add this interim dividend to the proposed dividend of the previous year so that you can pay the dividend amount. Next is income tax. Income tax paid during the year is out of the profits you are paying income tax, so it should not be deducted. The provision for taxation amount, you should take it separately, and that provision for taxation account you should solve, and you should put to bank account, that is 35,000, and solve what is the present year provision for taxation which has been transferred from P&L account. That amount you should find and take it to the application of funds. So this is how you should do this problem number 3. I'll just explain you what is in the question and I'll explain you the answer. So by passing the video, you just copy the answer from the notes, so that will be very easy to solve. If you can solve it on your own, see, after explaining the question and answer, if you can solve it on your own, just pause the video and take your notes and solve it on your own. After that, just check the answers. But if you can't solve it, just see the video and see what is the value given, so that you can copy it and finish off the problem. So that is how we are going to solve all this problem. Next few problems. See, next problem number 3. From the following balance sheet of A Limited, you are required to prepare the following: statement of changes in working capital, fund flow statement. Both, see, for calculating fund flow statement, you need first what is changes in working capital. So ultimately, we should find fund flow statement. So they have given balance sheet, liability side, equity share capital, preference share capital, P&L account, general reserve, proposed dividend, creditors, bills payable, and provision for taxation. So all the repeated liabilities, and the assets also goodwill. See, there is reduction in goodwill, which means goodwill written off. In problem number 1, we did it. Goodwill written off, so we should take it to the funds from operation, that is P&L adjustment account. Next, land and building, plant, debtor, stock, bills receivable, cash in hand, cash at bank. So all are repeated assets. Following is the additional information available. So depreciation 10,000 and 20,000 has been charged on plant and land and buildings respectively in 2016. So we should open separate land and building account and plant account. We should deduct the depreciation, and we should find the remaining balancing figure, which is purchase or sale of land and building. Next, interim dividend of 20,000 has been paid 2016. So 20,000 is the interim dividend, 42,000 is the proposed dividend of the previous year. Both put together, how much is it? 42 plus 20, 62. So 62,000 you should pay. So payment of dividend 62,000 in the application of funds. So next is income tax of 35,000 has been paid in 2016. So you are paying 35,000 out of your funds. So this income tax is nothing but you should take it to the payment of income tax, application of funds, column 35,000. Simple. That's all. You should solve the problem. So you have clarity over the question. Same repeated adjustment they are given. Now come to answers. First put fund flow statement, then source of funds and application of funds. Then first working note number is always changes in working capital. So we should calculate what is current assets, total it. What is current liabilities, total it. Here, what are the current assets? Data, stock, bills receivable, cash and cash at bank. All are assets. So total current assets. Then current liabilities, creditors, bills payable, provision for taxation. All three are creditors, bills payable. See, they didn't take provision for taxation here. They are considering it as a long-term liabilities, non-current liabilities. So you should open separate provision for taxation account and find what is the current year provision for taxation which has been transferred to P&L account. So that one you should bring it to the that one you should take it to the P&L adjustment account. So next is, so you should calculate what is increase in working capital, that is, one second. You should calculate what is increase in working capital by comparing 2014 and 15. There is increase in working capital, so you should calculate that is 51,000. Just copy the values and calculate what is changes in working capital. Next working note is, see, working note, they have given depreciation for land and building and plant. So for plant you should calculate separate account, for land and building you should calculate separate account. So land and building and plant are assets. So opening balance on the debit side, closing balance on the credit side, and depreciation is an expense. So you should put on the credit side. So by depreciation, the remaining balancing figure is nothing but by bank. So when it is by bank, it is you are purchasing. So purchasing 10,000 rupees of land and building. Sorry, you are receiving cash. Buy bank is nothing but you are receiving cash. So 10,000 rupees is coming in. So you are selling land and building. Here two banks. So you are purchasing plant. So 1,30,000 you purchase plant. Both will go to source of funds and application of funds. And next is, see, you have finished land and building and this thing. Then interim dividend they have given. So open proposed dividend. Proposed dividend, how much you are paying this year? 42,000 previous year. First proposed dividend is a liability. So opening balance will be on the credit side, closing balance will be on the debit side. So from that you are taking and paying using bank account, that is 42,000 and 20,000. So 60,000 is paid from bank account. So balancing figure is nothing but how much is transferred from P&L account. That is the balancing figure of 70,000. So this 70,000 is nothing but you should take it to P&L adjustment account to propose dividend 70,000. Below that, see, provision for taxation, you have calculated separate table because opening balance is 40,000, closing balance is 50,000, current year paid is 35,000. So remaining balance is nothing but amount which has been transferred from P&L account. So open provision for taxation, opening balance credit side, closing balance debit side, to bank, that is payment made to bank 35,000. So balancing figure is nothing but by P&L account 45,000. So this 45,000 will be taken to the P&L adjustment account to provision for taxation 45,000. So simple. We are solving proposed dividend and provision for taxation only because we should know how much is the transferred from P&L account this year. So these two and depreciation both, and they have given both depreciation, then dividend proposed and income tax provision for taxation. All four you should open P&L adjustment account. Debit side you should record all the four. And P&L balance, opening balance, how much it is? 30,000, closing 48. So opening balance on the credit side because it is a liability. So opening balance debit side, closing balance credit side. So from that, general reserve you should always take into consideration every sum when you are doing. There is increase in general reserve. So that amount you have been transferred from P&L account this year. How much is been transferred? 30,000. So to general reserve 30,000. To transfer to general reserve 30,000. So if you total it, whatever is the balancing figure, if it is on the debit side, it is application of funds. If it is on the credit side, it is source of funds because cash is coming in. So by funds from operation, balancing figure 2,18,000. So this 2,18,000 should be taken to the source of funds, that is 2,18,000. Simple. So whatever you have calculated, see here to bank 35,000. So provision for, you are making payment to tax. So it is application of funds. So payment of income tax 35,000. So dividend, how much you are paying? 62,000. So payment of dividend 62,000. You should calculate payment of dividend 62,000. Then come to the equity share capital. There is 1 lakh increase in equity share capital. So you should put here issue of equity share capital 1 lakh. Below that 8% preference share capital, 1,50,000 is the opening, 1 lakh is the closing. So 50,000 redeemed. So redemption of preference share capital 50,000. So this is how you should calculate fund flow statement. That is the problem number 3. Same problem number 2. So you just pause the video now, start working the problem number 3. Then come back to the video and just check the answer. I'll just show the answer. This is problem number 3 answer. 3,28,000 source of funds and 3,28,000 application of funds. So this is the answer. And these are the different working notes. Done. Now moving on to problem number 4. See, if you want this particular fund flow operation, that is fund flow statement PDF, you just ask me, I'll just forward you to the fund flow statement, or else I'll ask the academy to forward this PDF with the along with the email ID. That is along with the mail, I'll just ask to forward this particular fund flow statement notes. So next, moving on to problem number 4. Problem number 4 also the same thing. So there is no new addition and all. We should calculate working, first we should calculate changes in working capital, then each adjustment we should calculate separate accounts, then we should calculate P&L appropriate P&L adjustment account, so that we can arrive at fund flow statement. Just see there what all they have given. Problem number 4. From the following figures, prepare a statement showing the changes in working capital and fund flow statement during the year 2014. So assets they have given fixed assets net, which means after depreciation net is 5,10,000, 6,20,000. Next, investments they have given 30,000, 80,000. Current assets they have directly dumped everything into current assets. So you don't have to find what is separately what is total of current assets. So changes in working capital become easier. Then discount on debentures. Then liabilities, equity share capital, preference share capital, debentures, reserves, provision for doubtful debts, and current liabilities. So these are the different liabilities. Below that they have given adjustments. You are informed that during the year a machine costing 70,000, book value of 40,000 was disposed of for 25,000. See, machine costing 70,000. In the books it is valued at 40,000 today. was disposed of for 25,000. So loss of 15,000. Done. Then preference share redemption was carried out at a premium of 5%. So redemption of preference share, how much? 1 lakh was been carried out at a premium of 5%, which means 1 lakh into 5%, 105%. That is 1 lakh 5,000 rupees you have given for 1 lakh rupees of preference share capital. So dividend at the rate of 15% was paid at the equity shares for the year 2014. For the year 2014, dividend at the rate of 15% was paid on equity shares. So how much is the equity shares? 3 lakh on the original shares. So 3 lakh into 15% is the dividend paid during the year. Below that, the provision for depreciation stood at 1,50,000 on 31/12/2013 and 1,90,000 on 31/12/2014. So here depreciation is only applicable only on fixed assets. So only they are given directly fixed assets, and for that depreciation is 1,50,000 beginning, 1,90,000 ending. So remaining from that 1,50,000, first you should deduct this 30,000. That is 30,000 which belongs to machine which has been sold. So 1,20,000. So remaining 1,90,000 minus 1,20,000, you are getting 70,000. 70,000 is the current year depreciation. Simple. This is just normal math. You should just understand the concept, one flow statement. If you are not getting the concept, just keep working this same sum again and again, so that you will get the. If you grab the concept, if they give even tougher question, if they give even 20 adjustments, you can solve. That is one flow statement. You are not calculating something. You are just copying the numbers. That's all in this one flow statement. So next is stock which was valued at 90,000 as on closing date previous year was returned back to cost of 1 lakh for preparing P&L account for the current year. So when you are increasing your stock value, that is stock value last year is valued at 90,000. Now closing stock is valued at 1 lakh. So current assets, there is increase in 10,000. On the other side, when there is increase in current assets, when your closing stock is going up, your P&L will automatically go up. So you should take it to the P&L adjustment account. So we'll see all these entries in the solution. So problem number 4, first we should put fund flow statement. Then fund flow statement, what is the format? Source of funds, amount, and application of funds and amount. So below that, first working note number 1. What is working note number 1? Changes in working capital. So how will you calculate changes in working capital? Current assets minus current liabilities. Here there is current assets. They have directly given 2,40,000 and 3,75,000. So only one adjustment related to current assets they have given. That is closing stock is valued at 90,000, which is written up to cost. That is last year ending it is valued at 90,000, but current year ending they have taken it to the 1 lakh. So 10,000 last year, which is less, has been valued more this year. So last year you should add 10,000 back, so that it will come to same valuation. So last year current asset you should add 10,000, so that it will come to 1 lakh. So below that, like working capital record, you should take down what is particulars 2015, 14 and 15. Current assets they have given is 2,40,000 and 3,75,000. Just take it down, and on that for a year ending 2013, that is year ending 2014. So I have recorded wrongly here 2014 and 15. It's just 2013 and 14. So you just have to add 10,000 for the previous year ending, because previous year ending you have valued stock at 90,000, but current year ending 1 lakh. So previous year you should add back 10,000 to bring back the values to the same valuations. So add adjustment under undervaluation of stock 10,000, so that your current assets will come to the original figures, that is 2,50,000 and 3,75,000. Below that, less the current liability 70,000 and 1,45,000. You will get net working capital. So net working capital there is some increase, and calculate the increase in working capital. When there is increase in working capital, take that to application of funds. Increase in working capital. So that is working capital balance. Only one new thing from the working capital calculation, that is last year stock has been valued at 90,000, but this year it is valued at 1 lakh. So last year just add up the undervalued stock, that is 1 lakh minus 90,000, that is 10,000. You should add back the last year current assets value. So next is see, they have given first they have given machine, that is machine belongs to here fixed assets. So open the fixed assets account, just put the opening balance on the debit side, closing balance on the credit side, and whatever the depreciation. See here depreciation we can calculate using the provision for depreciation account. So just calculate the current year depreciation by last year accumulated depreciation is C. Simple man. This year accumulated depreciation 1,90,000. Put it in the outer column. Okay. Then last year depreciation is, put it in the inner column, 1,50,000. From that 1,50,000 depreciation which belongs to machine costing 70,000. That is 70,000 minus book value is 40,000. That is 30,000 is the depreciation. So that depreciation machinery is sold. So machinery which has been sold, on that 30,000 is the accumulated depreciation. Just take it out from the 1,50,000. You'll get 1,20,000. So that is the depreciation which belongs to the assets, fixed assets which is lying in this fixed assets. So if you deduct both 1,90,000 minus 1,20,000, you will get current year depreciation, that is 70,000. So just open the fixed asset account, opening balance, closing balance. Then for how much the machine has been sold, 25,000. What is the loss that has been made? So loss which has been made, what is the entry? P&L account that are two fixed assets. So in the fixed assets, by P&L 15,000. By bank you are issuing 25,000. By depreciation we have calculated 70,000. If you total it, you will get what is total 7,30,000. Then the balancing figure is nothing but purchase of fixed asset. So there is some purchase of fixed assets 2,20,000. Simple. You just do this fixed asset account on your own, like how we did in the previous sums, and calculate what is the balancing figure. So with that we have calculated what is the balancing figure. Then see, they have given preference share redemption. So it is redeemed at premium of 5%. So just come to the application of funds. There, redemption of debentures, how much you are redeeming? 4 lakhs. On that 4 lakhs, wait, this is problem number 5. Sorry. Here problem number 4 and problem number 5 are actually same questions. See, problem number 4, redemption of debenture, you are redeeming at the percentage of 5%. So how much you are redeeming? 2 lakh minus 1 lakh. 1 lakh rupees you are redeeming preference shares into 105%. 1 lakh into 105%, 1 lakh 5 rupees. 1 lakh 5,000 rupees. So redemption of debentures 1 lakh 5,000 rupees in the application of funds. Simple. Second point, they are redeeming at 5% profit, 5% extra. So 1 lakh into 5%, that is 1 lakh into 105%, 1 lakh 5,000. So next year they have given is dividend at the 15%. So on the original charge you should calculate, that is 3 lakh. So 3 lakh into 15%, that is the payment of dividend. Put it in the application of funds. Point number 3 is over. And point number 4, there is depreciation which has been taken to the fixed asset account, and you should take it to the funds from operation account. So next one is stock undervaluation, which is revalued at 10,000 extra. So that there is no changes in the changes in that should be taken to the current assets and the profit and loss account. We have taken to the current assets. Now we didn't see what is funds from operation yet. We'll see that. So coming to the assets, that is there increase in any investments? Yeah. So there is some purchase of investments. So in the application side, purchase of investments 50,000. Then see, there equity share capital is there is increase 50,000. So take 50,000 issue of equity share capital, and preference share capital we have calculated redemption of preference share capital. Then debentures 1 lakh, this year 2 lakh. So 1 lakh issue. So issue of debentures, source of funds 1 lakh. So we have calculated all the numbers. So only one number left here, that is funds from operation. So just calculate what is funds from operation. Coming to the funds from operation calculation, below that next working out funds from operation, under that P&L adjustment account, calculate the, just put the format, and debit side, credit side opening balance, credit side closing balance, that is 1 lakh. What is the opening balance? Reserves 1,10,000. So reserves is considered as P&L account adjustment here. So 1,10,000 to the opening balance, 2,70,000 to the closing balance. So remaining all the calculation you should take into consideration. Here coming to the first entry, that is by P&L 15,000. So 2 fixed asset 15,000. Okay. Then by depreciation 70,000. So 2 depreciation 70,000. These and all should be taken to the P&L account. And next is, see, discount on debentures, last year 10,000, this year 5,000. So you have repaid 5,000 of debentures. So to discount on debentures, to return off of discount on debentures, 5,000 in the debit column. 5,000 in the debit column. So next, for redemption of debentures, how much is your extra you are paying? 1 lakh you are redeeming at 1 lakh 5,000 rupees. So 5,000 should be taken here. So redemption of debentures to redemption of premium on preference share capital 5,000. Then see, provision for doubtful debts, last year 10,000, this year 15,000. So there is increase in provision for doubtful debts. When there is increase, you are transferring extra amount from your P&L account. That is, your P&L account balance will go down. So to provision for doubtful debts 5,000. And depreciation, that is proposed dividend you are paying at 15%. So 3 lakh into 15%, 45,000. When you summation of all this is 4 lakh 15,000. Bring that to the credit side, 4 lakh 15,000. If you deduct it from the opening balance, you will get what is funds from operation. That is 2 lakh 70,000, I guess. Yeah, 2 lakh 70,000, 2 lakh 95,000. Bring the 2 lakh 95,000 to the source of funds, because cash is coming in, because there is some profit. There is funds which is received from operations, so that is 2 lakh 95,000. When you total it, 4 lakh 70,000, both the sides. So just start the sum now. I have given you the explanation how to solve this problem number 4. First, working out number 1, that is changes in working capital. In that current assets, you should add 10,000 because there is some undervaluation of stock. So previous year current assets value, you should add 10,000. That's it. Changes in working capital done. Then open the fixed asset account. Fixed asset account, just calculate what is the value at which asset is sold, and what is the loss on sale of that fixed asset, and what is the depreciation for that asset. Depreciation for that asset can be calculated by separate working note, that is note number 1, calculation of current year depreciation, that is current year depreciation, that is closing provision for depreciation minus opening provision for depreciation. In that opening provision for depreciation, what you should do is, opening provision for depreciation 1,50,000, you should deduct 30,000 which belongs to machinery which is sold. So 70,000 minus book value 40,000, 30,000 depreciation belongs to that machine sold. If you deduct that 1,20,000, so 1,90,000 minus 1,20,000, you will get 70,000 depreciation. So below that we should again calculate what is proposed dividend. So next statement is proposed dividend, or else you can directly put proposed dividend, that is 15%. There is no separate proposed dividend here in this liabilities. So 15% is paid out as dividend. Out of the 3 lakh, you should always calculate on the original shares. You should not calculate on the closing shares. Original shares, you should calculate what is the dividend. So make that, then calculate funds from operation, bring that to source of fund. So I'll just pause the video. I'll just show the answers here. You just pause the video and see the answers once you complete it. This is one flow statement. Total is 4,70,000, 4,70,000. Working notes 1. Working changes in working capital 50,000. Then fixed asset account, working note number 2. You should calculate what is fixed asset account by calculating note number 1, that is current year depreciation. So current year depreciation 70,000. Next is, see this, calculation of funds from operation, P&L adjustment account, opening balance, closing balance. Then this is the fund flow statement. Then what is the funds from operation is 2,95,000. 2,95,000. So just pause the video and start solving the answer. Then check the answers. See, why I am doing funds from operation in this way is, see, one is this funds from operation, only if you work out you will come to know. So if I keep repeating the answers, you will just watch the video and you will leave. So just take down the notes, you solve on yourself, so that if you get a question from this funds flow statement, you will just solve it very easily. So next is problem number 5. See, problem number 5 is, there is no changes between problem number 4 and problem number 5. All the entries are very similar. They have given depreciation for all 3 assets. There they give summation of all the assets, that is fixed assets. Here they separated all the assets into different values: land and building, plant and machinery, fixture and fittings. So you should calculate what is the depreciation, and if you deduct the depreciation, you will find what if there is purchase or sale of particular fixed asset. So next is land costing 1 lakh is sold for 2,50,000. The sale process was credited to land and buildings. So there is some incoming of cash, that is 2,50,000. So the 2,50,000 is nothing but a source of funds. In source of funds, you should calculate sale of land and building. So share in other companies, shares in other companies were purchased at dividend amounting to 6,000 declared out of profits made prior to the purchase as received and used to return on the investments. So there is some incoming of funds, that is there is dividend received, but the dividend has been received on shares purchased by that company, that is company, our company name is C Limited. C Limited purchased some shares from some other company. For that, dividend has been received at 6,000, but the dividend belongs to the prior acquisition of dividend. Like that is, prior to acquisition of such shares, the dividend is proposed but issued after the acquisition of shares. So that acquisition is nothing but pre-acquisition dividend received 6,000, which is nothing but source of funds. It is not taken to the P&L account. It should be directly taken to the investment and deducted from the investment value. Next, goodwill has been written off against the general reserve. Here goodwill is 2,40,000, 20,000 has been written down. It has been written down from the general reserve. So both the entries you should not take into consideration. That is, there is fall in general reserve, which means P&L account should add. So instead of crediting the P&L account, we are just leaving the general reserve entry on the credit side. That is, by general reserve, we should have put 20,000, and to goodwill written off, we should have put 20,000, both getting knocked off. So that is the problem number 5. So just solve the problem number 5. And point number is, the proposed dividend for the year 30th June 2015 was paid, and in addition an interim dividend of 52,000 was paid. So proposed dividend and interim dividend 52,000. What is the proposed dividend? They would have given directly what is the proposed for the purpose of final year dividend. Previous year the proposed dividend will be paid in the current year. So 78,000. 78,000 plus 52,000 interim dividend. How much is the total? 78 plus 52,000. You are getting 1,30,000. So in the application of funds, payment of dividend, record 1,30,000. So this is how you should calculate the problem number 5. I'll just explain you the answer, then start working on your own. See, first problem number 5, fund flow statement. Fund flow statement, below that same format, source of funds, application of funds. Coming to the working notes, working note number 1, first changes in working capital. Just take down all the current assets and current liabilities. Here, what are all the current assets? Cash in hand, sundry debtors, bills receivable, stocks, prepayments. Then only up to prepayments is the current assets. Shares in other companies is nothing but investment, goodwill, preliminary expenses. All these are not current assets. So coming to the current liabilities, sundry trade creditors, bank overdraft, bills payable. Sundry creditors, bank overdraft, and bills payable. All these three are current liabilities. So record all these current assets and current liabilities values and calculate what is working capital. Here, working capital for the previous year is 1,98,000. Current year is 76,500. So there is reduction in working capital, which means decrease in working capital. So we should, when there is decrease in working capital, you are taking back the funds in that is put in working capital. So there is funds coming into the business. So you should take it to the source of funds. So in respect of source of funds, record decrease in working capital 1,21,500. So first calculate what is working capital, put the working note number 1 and calculate this. Then after calculating working note number 1, one by one each account you should calculate now. So working note number 2 is nothing but total depreciation. So if you calculate this point number A, you will get what is total depreciation. So 21.5% on the buildings. So 10 lakh into 21.5, 2.5%, that is 25,000. Machinery 32,000, and furniture 5% on 10,000, which means 500. Addition of all both is total depreciation. Total depreciation. So below that, separate account, open it. Land and building account, plant and machinery account, furniture and fitting account. Why we are opening separate account is, opening balance will come on the debit side because it is all three are assets. Closing balance will come on the credit side, and whatever depreciation will come on the credit side by depreciation under all three accounts. Whereas if there is any sale of land, suppose a piece of land costing 1 lakh was sold for 2,50,000. So how much is cash coming in? 2,50,000. So by bank 2,50,000, how much is the profit? 1 lakh minus 2,50,000, you will get 1,50,000 profit. So to P&L account 1,50,000 on the debit side. So remaining balancing figure is nothing but purchase of land and building. So plant and machinery also same thing. For plant and machinery there is no adjustment. So opening balance, closing balance, depreciation. Balancing figure is nothing but purchase of plant and machinery. Furniture and fittings, opening balance is 6,000. Closing balance is 5,500. And depreciation they have given 5%. So that is 500. So it is tallying. So there is no purchase or sale of plant and machinery or furniture and fittings. So what are all the different source of funds and application of funds? Just take it to the fund flow statement. By bank, so cash is coming in, take it to the source of funds. To bank, cash is going out, so take it to the purchase of land and building, take it to the application of funds. To bank, so purchase of plant and machinery, take it to the application of funds. So with that 3 accounts we have completed. So last one, next we should calculate. See, they have given adjustment for shares in other companies, that is 6,000 dividend received, but it belongs to prior acquisition of dividend, that is before acquisition of that shares the dividend has been proposed, but after acquisition of shares they have distributed that dividend, because of that we have received that dividend, then it is nothing but pre-acquisition dividend. So shares in other companies, opening balance, for how much you are purchasing? See, shares in other companies, for how much you are purchasing? 80,000 you are purchasing, final value is 2,34,000. So opening balance 80, closing balance is 2,34,000. Then you are receiving 6,000 from that as dividend. So dividend should be added to the bank account, that is bank account added to shares in other companies. So if you add that 6,000, it's simply like it is pre-acquisition dividend, man. So we are crediting it to shares in other companies. If suppose it is post-acquisition dividend, it won't come in shares in other companies itself. It will come as dividend to bank, that is bank account added to dividend account, dividend received account. So here by bank 6,000. So balancing figure 1,60,000 is nothing but purchase of shares in other companies. So this should be taken to the application of funds, and this should be, this by bank should be taken to the source of funds. So last one is proposed dividend. Proposed dividend, what they have given, opening balance 78. This is liability. So opening balance should come on the credit side. Closing balance should come on the debit side. And how much is the interim dividend which has been paid? 52. How much is the proposed dividend for the previous year? Previous year proposed dividend 78. 52 plus 78, 1,30,000. So two banks 1,30,000. If you total it, you will get how much is transferred to P&L account this year. By P&L account 1,24,000. So this is nothing but you should take it to the P&L adjustment account, and this 2 bank account you should take it to application of funds. So next is funds from operation. Funds from operation, simple. One more thing which you should do is, here you have sold some, see, sorry, that is next sum. Funds from operation, here one more thing you should take into account is, see, a piece of land and building, land costing 1 lakh has sold. Okay, so here for this land, you know that for land there is no depreciation. Okay, here for freehold buildings and land both they have given together. Understand that for freehold building and land they have given together 9 lakh and 9 lakh 76. But freehold buildings is only 10 lakh rupees. Okay, cost is 10 lakh rupees. On that 2.5% is the depreciation. And what we have sold is land we have sold. So there is no depreciation in respect of this land. So 2,50,000 entire amount is sale process, and 1 lakh is the cost. The remaining amount is profits. So there is no depreciation on this particular land. So funds from operation, simple. P&L account, opening balance put it on the credit side, closing balance debit side. So depreciation, how much we calculate? 57,500. Proposed dividend, that is how much is transferred to P&L account, 1,24,000. Bring that. And one more thing is, we have calculated here. See, shares in other companies we did. Goodwill, there is some goodwill written off. So there is reduction in goodwill, but what they have told is that reduction in goodwill is against general reserve. So reduction in goodwill is 20,000. General reserve utilizes 20,000. So both knocked off. P&L account there is no adjustment. So suppose this goodwill is not given, only general reserve last year 60,000, this year 40,000. So some amount of general reserve is brought back to P&L account. So when you are bringing back, P&L account will go up. So on the credit side you should have taken by P&L by general reserve 20,000, and for this goodwill, 2 goodwill written off 20,000. So both getting knocked off, 20,000, 20,000. So you should total it. Only preliminary expenses 6,000 is the opening, closing is 4,000. So you are repaying 2,000. So 2 preliminary expenses written off 2,000 rupees. So you should total it. Remaining funds from operation is nothing but the profits which is received from the operations. So take this to fund flow statement. That's it. That is problem number 5. With that, problem number 5 is over here. See, take problem number 6. Problem number 6 and problem number 5, there is no difference. Actually, you see the first problem and second problem and third problem are similar. Fourth problem is one category, and fifth and sixth problem are one category. Fifth, sixth and seventh is also from same category. So all these three are like all these three balance sheets are new amended balance sheets, that is assets on the liabilities on the top and assets on the bottom. And this problem number 6, assets on the top, and when they are giving in this method, that is assets on the top, liabilities on the bottom, there will be little bit adjustments, more adjustments. Whereas if they are giving the old model of balance sheet, the adjustments will be low. That is, there will not be any adjustments. So when they are giving this model of balance sheet, what you should do is you should focus on adjustments. So every adjustment you should calculate so that you can easily solve the sum. So simple fund flow statement, all the sums are similar, man. What you should do is you should just work on it. Like every adjustment, just see what is the adjustment they have given, then what you should do. Suppose for example, in addition, plant at a cost of 5,650 was purchased during the year, which means plant is purchased. So two places you should take it down. One is when plant is purchased, application of funds, record purchase of plant, and in plant account record in the debit side to bank 5,650. So this is how you should do the fund flow statement. Every entry you should take it to two places. So we'll see problem number 6. The following is the balance sheet of AIC Limited as on 31st December 2015 and 16. Balance sheet. Assets they have given fixed assets, property, machinery, goodwill. Current assets they have blocked into fixed assets and current assets separately. Next, liabilities, and they have given current liabilities, shareholders and profit and loss account, and current liabilities, creditors, bills payable, bank overdraft, and provision for taxation. Below that they have given adjustments. During the year ended 31st December 2016, dividend. A dividend of 26,000 was paid, and assets of another company were purchased at 50,000 payable in fully paid up shares. So for the year in between the year, that is for the year ended 31st December 2016, dividend is 26,000. So application of funds, payment of dividend, record 26,000. That is first point. So when you are taking down payment of dividend in 26,000 year, two places you should take down. One is application of funds, other one is on the debit side of P&L adjustment account. So next is assets of another company were purchased at 50,000 payable in fully equity shares. Understand it. Assets you are purchasing from other company by paying equity shares. So when you are purchasing assets, what is your entry? Purchase of asset will come in application of funds. And when you are issuing equity shares, what is the entry? When you are issuing equity shares, you will receive cash. So issue of equity share capital, you will get in source of funds. So in source of funds, issue of equity shares 50,000. In application of funds, purchase of assets 50,000. So both getting knocked off. So this particular entry, that is assets of another company were purchased at 50,000 for fully paid up shares, is not taken into account, because in the source of funds it will come issue of equity shares 50,000. In application of funds it will show assets purchased at 50,000. So both will get knocked off. Next entry, such assets were purchased were stock 21,640, machinery 18,360, goodwill 10,000. So all these three should be taken off from the current assets. Simple. All these three should be removed from the current assets. So that if suppose they have given stock, this 21,640 should be removed from the stock, and machinery 18,360. That 18,360 should be received deducted from the purchase of machinery. Like it should be in the machinery account, it should be recorded as 2 equity share capital. Next, goodwill. Goodwill, there is changes of 10,000. So this normally this goodwill, what you will do when there is increase in goodwill, you will take it from the P&L account. So P&L account you will credit it when there is increase in goodwill. So here what you should do, here you should not take it to P&L account, equity share capital 10,000. So in P&L adjustment account, there won't be any goodwill shown. So simple, very simple calculations. The increase in goodwill should not be shown in P&L account because it is by issue of equity shares. So next, in addition, plant cost 5,650. I have explained you already here. Plant cost 5,650. So when you are purchasing plant, what is the entry? Application of funds, purchase of machinery, purchase of plant. Wait. In addition, plant cost 5,650 were purchased during the year. So purchase of machinery 5,650, application of funds. And in the plant and machinery account, you should calculate 2 bank account. On the debit side, 2 bank account 5,650. Next, depreciation on property 4,250 and on machinery 10,760. Both the depreciation should be deducted from the respective fixed asset account, and it should be taken to the P&L adjustment account. 2 entries. Next, income tax paid during the year 28,770 was charged to provision for taxation. So income tax paid during the year is 28,770. So application of funds, payment of tax 28,770, and we should open a separate provision for taxation account. Opening balance 40,000 on the credit side, closing balance 50,000 on the debit side. 2 bank account 28,770. So remaining leftover on the credit side, that is nothing but transferred from P&L account. So by P&L account, and in the P&L account, you should take it as 2 provision for taxation account. Simple, very easy concepts. So when you are solving the sums only, you will understand it. Then net profit before taxes 76,300. So net profit before taxes 76,300. So you should calculate what is the changes in working capital by copying all the current assets. Okay, what all the different current assets they have mentioned, current liabilities they have mentioned. Copy it, but don't take this provision for taxation because a separate account should be created. So there is increase in working capital of 30,890. In the next account, what you should open is property account. In property account, there is separate depreciation provided. So opening balance will come on the property. Opening balance will come on the debit side, closing balance credit side, and whatever depreciation will come on the credit side. And the balancing figure, by putting the depreciation, there is no balancing figure. So total it 1,40,500. For machinery, opening balance on the debit side, closing balance on the credit side, and there has been purchase of machinery. So machinery, there is purchase. What purchase? By bank you are purchasing 560. So to bank you should put 5,650, and by equity share capital you are purchasing 18,360. So to share capital 18,260. That is 360. If you total it, what is the balancing figure? There is no balancing figure. Just total it. 1,30,000. So here this 2 bank, it should be taken to application of funds. Here by bank, there is no by bank. So only 2 bank is there. So application of funds. Then provision for taxation. Open a separate provision for taxation account. It is a liability. So opening balance will come on the debit side, credit side, closing balance will come on the debit side, and whatever has been paid, it will be shown as 2 bank account. So remaining balancing figure is nothing but by P&L account. It should be taken to the P&L adjustment account as debit side, to provision for taxation account. So that is provision for taxation account. This bank account which has been credited and debited to provision for taxation, that amount should be taken to application of funds. Same concept. Again, funds from operations, P&L adjustment account, opening balance on the debit side, credit side, closing balance on the debit side. Then take down what is depreciation, what is provision for taxation, which we calculated in the adjustments, above statements. Then from general reserve, see, here general reserve they have given reserves. It has been increased to 40,000. So 10,000 has been transferred from P&L account to general reserve. So to general reserve 10,000. And to proposed dividend. How much is the proposed dividend? See, here there is no proposed dividend itself. Okay. Here they have given during the year dividend of 26,000 has been paid. So in the P&L account it will be shown as to proposed dividend, and in the funds from operation it will be shown as payment of dividend 26,000. That's all. If they are given separate liability as proposed dividend, then you should open a separate account of proposed dividend and record the opening balance and the closing balance. Then you should calculate how much is transferred from P&L account. Here they have not given any separate proposed dividend account. So entire amount, that is dividend paid amount, will be to proposed dividend. So you should summarize it and calculate what is the balancing figure. So balancing figure is nothing but by funds from operation. Take it to the source of funds. Simple. That's all. Problem number 6. So just pause the video, work it out. If you are not getting the answer, just pause the video and see the answers. So I'll just show the answers here. Problem number 6. Okay, problem number 6. I'll just pause the video here and just look at the fund flow statement. Total is 91,310 on the source of funds and application of funds. So next, changes in working capital. Just pause the video and check. 30,890 is the increase in working capital. Next, one by one statement, just take it down. Property, machinery, then provision for taxation, funds from operation. I think so. I can send the PDF through the mail itself. I'll just check with the admin department, and then I'll just, if you want, I'll just send the PDF of this fund flow operations only. Funds from operations. Sorry, cash fund flow statement. Only PDF of this fund flow statement. I'll try to share it. So with that, problem number 6 is over. Moving on to next one. Problem number 7. 7 and 8 are same sums. 7 and 8, like 8 they asked in exam. So 7 and, if you solve both, two sums are there. Either of this one sum you can solve, and the other sum you can solve. So there is not a very big entries, that is adjustments, in the problem number 8. So in problem number 8 you can solve on your own, because there is no adjustments. Just take down the answers, that is take down the values and just copy it. That's all. They itself have given what is the increase or decrease. Just post it in the fund flow statement. You will get what is the value. So I'll just solve. If you want this problem number 8 answer, like a printed answer, just go to the website and download the June 2018 suggested answers of paper 10. Then June 2018 suggested answers of paper 10. You will be given with this problem number 8 answer. So problem number 7. The following is the balance sheet of Garuda Limited for the year ended 31st March 2015 and 31st March 2016. So same repeating: liability, share capital, general reserve, capital reserve, profit on sale of investment. So investment has been sold. So profit on sale of such investment is transferred to capital reserve. Okay. Then profit and loss account, 15% debentures, accrued expenses, creditors, provision for dividends, and provision for taxation. So these are current liabilities. Next, fixed assets less accumulated depreciation, they are given net fixed assets. Then long-term investments at cost, stock at cost, debtors, net of provision for depreciation of 45,000 and 56,250 for the respective years. So debtors after provision for depreciation, they have given for provision for debt, provision for doubtful debts. So next, bills receivable, prepaid expenses, both are current assets. Miscellaneous expenditure. So there has been some repayment of miscellaneous expenditure, which should be taken to the application of fund. Below that, same what is that? Adjustments. First, during year 2015-16, fixed asset with net book value of 11,250, accumulated depreciation 33,750 was sold for 9,000. So right now book value is 11,250. You sold for 9,000. So there is some loss. So loss should be transferred to P&L account. This amount, what is the amount you received on sale value, that should be taken to the source of funds. So next, during the year 2015-16, investment costing 90,000 were sold, and also investment costing 90,000 were purchased. So you are selling investment costing 90,000, but at what cost you are selling? 90,000 plus how much is transferred to capital reserve? Profit on sale of investment, how much is the profit? 11,250. 90,000 plus 11,250, you are getting 1,01,250 is the sales value. So in the source of funds record, sale of investment 1,01,250. Next, debentures are retired at the premium of 10%. So how much is the debentures which has been redeemed? 3,37,500 minus 2,25,000. You are getting 3,37,500 minus 2,25,000, right? Yeah, you are getting 1,12,500 redeemed at 10% premium. So into 110%, you are getting 1,23,750. So that is the application of funds. In application of funds, just record redemption of debentures 1,23,750. So next is, so where should this be taken? This premium should be taken to the profit and loss adjustment account. You should debit the to premium on repayment of debentures. So next, tax of rupees 61,875 has been paid. So it should be taken to the application of funds and also to the provision for taxation account. You should open a separate account, provision for taxation, and take this amount of income tax paid and calculate the balancing figure, that is how much is transferred to P&L account for the current year. Then point number E, during the year 2015-16, bad debts 15,750 were written off against the provision for bad debts account. So previous year 45,000, written off bad debts is 15,750. How much is the remaining bad debts written off? 15,750. 29,250. But closing bad debts is, closing provision for bad debts is 56,250. So 29,250 minus 20, like 56,250 minus 29,250, you are getting 27,000. So that has been transferred during the current year. So in the P&L adjustment account, to provision for doubtful debts, you should take 27,000. So to propose dividend was 2014 was paid in 2015-16. So proposed dividend 33,750 in the respect of application of funds, payment of dividend 33,750, and in respect of P&L adjustment account, to propose dividend 38,250. That's all. You should again calculate the same method: fund flow statement, then what changes in working capital, then each statement, that is fixed asset particular account, then investment account separately, then you should calculate what is the provision for taxation account. All these three accounts you should calculate, then you should go for fund from operation. So first, under working note number 1, statement showing changes in working capital. Statement showing changes in working capital. First, current assets. What are all the different current assets which we found? Debtors, stock, bills receivable, prepaid expenses, and only bills receivable and prepaid expenses. Stock, debtors, prepaid expenses, and bills receivable. And what are all the liabilities? Accrued expenses, creditors. Both this provision for dividends and provision for taxation, separate account should be open. It is not current liability. So summary of it, then calculate net working capital. Then whether increase or decrease you should calculate. There is increase in working capital of 28,000. Sorry, 28,125. That is the working capital. So pause the video here. First work out what is working note number 1. Then check the answer. 28,125. Moving on to working note number 2. Working note number 2. So next, what working note you should calculate is fixed asset. For that fixed asset, first we should know what is the current year depreciation. Below that, note number 1, fixed asset, leave 5 lines gap. Working note number 1, current year depreciation. See, to calculate current year depreciation, first check what is the accumulated depreciation of the closing year. So closing year accumulated depreciation, outer amount column. Then opening accumulated depreciation, inner amount column. From that, deduct what is the depreciation on the asset which has been sold. So asset sold at 11,250. Book value is 11,250, sold for 9,000. Accumulated depreciation of that is 33,750. So deduct this 33,750 from the 2,25,000. You will get what is the net accumulated depreciation belongs to opening. So 2,25,000 minus 33,750, you will get 1,91,250. If you deduct from the accumulated balance of the closing balance, you will get what is the current year depreciation. Take that to the fixed asset account. By depreciation 90,000. Then you have sold net book value 11,250 at 9,000. So 9,000 rupees is the by bank. Then remaining loss is by P&L account. So you will get what is the opening balance and closing balance. Total it. The balancing figure is nothing but purchase of fixed asset. So next is investment account. Investment account also same thing. Opening balance debit side, closing balance credit side. You are selling and purchasing both. You are selling investment at rupees 90,000 plus 11,250, that is 1,01,250. Then you are purchasing investments worth 90,000. So to bank account 90,000. Then profit has been transferred to capital reserve. To capital reserve 1 lakh, that is 11,250. So both should tally. Both should tally. Then the last statement, that is provision for taxation. Like after this only funds from operation. So provision for taxation very simple. Opening balance will come on the credit side, closing balance debit side. So whatever is paid as tax will be come on the debit side to bank account. Then balancing figure is the P&L transferred account. So it should be taken to the P&L adjustment account. So moving on to the last statement, that is funds from operations. Calculation of funds from operations. Opening balance on the credit side, P&L account adjustment account. Opening balance of the P&L account on the credit side, closing balance on the debit side. Take down one by one. Loss on sale of fixed asset, then depreciation, then provision for tax, proposed dividend. Then what is transferred to general reserve current year? 2,25,000 minus 2,81,000. So some amount has been transferred to general reserve. That balance is nothing but it's handled from P&L account. So record it on the debit side to general reserve. Then to premium on debentures you paid 11,250. Then to miscellaneous expenses you have repaid something. That remaining repaid amount should be taken to the P&L account adjustment. So 5,625. So balancing figure is nothing but funds from operations. That is 3,84,750. Simple man. See, when you pause the video and if you work out on your own, if you are not getting the answer, just come to the video and then look at the answer so that you will know, okay, this statement, this particular, like normally when I was writing exam itself, I usually will forget this miscellaneous expenditure and all when I used to work out during the preparations. So what happens is when you work out, when you are leaving miscellaneous expenditure, why the balance is not tallying. So now you know that 3,84,750 is answer. So when you are coming back to the question, if your answer and fund from operation and this fund from operation answer will be different because you didn't take miscellaneous expenditure. So that time you will understand that you should always check for miscellaneous expenditure. So this is how you will get used to it, to check different adjustments and to check different balance sheet items. Normally when you start your sums, that too these kinds of balance sheet and adjustment sums like cash flow statement, fund flow statement, then there are some other sums in actually in final everything will be like this only. Like so many problems, nearly 40 to 80 problems will be like they'll give balance sheet, they'll give adjustments. You have to find what is the business like consolidated financial statements. You have to find what is business combinations. All these are different topics in the final level. So all these will be same balance sheet and adjustments. So how will you remember this different, like suppose when you are working out in exam, if you have not practiced, you won't see this miscellaneous expenditure even though it is in your front of your eyes itself. But if you work out during the revisions, what will happen is every time when you miss the miscellaneous expenditure, you will start seeing the miscellaneous expenditure. Okay, every time I'm not remembering the miscellaneous expenditure when I'm doing this adjustments. So in exam I should remember it, like it will get registered. Different adjustments only if you work out, you will get registered within your mind that this particular entry should two entries should come in application of funds, it should come, and also in P&L account adjustment it should come. So this is how you will look at the problems when you work out. So that is why I'm telling you to work out all these last four sums. First four sums we have worked out. Last four sums, please you work out, then only you will get it. So now you know the answer. You know the what is the funds from operation, that is 3,84,750. Just pause the video and just go for preparing funds from operation. Pause the video and prepare whole problem number 7 so that you can get the answers easily. Like if you're going wrong also, you will know where you're going wrong. So what is different accounts we have seen. Then coming to the fund flow statement, take down all the source of funds and application of funds. Total amount will be 6,07,500 on the both the sides. So here I'll show the each statement. Just I'll show it for 2 seconds. When you want, you just pause the video and check your answers. Now start your answers. Just pause the video and start your answers. This is fund flow statement. 6,07,500, 6,07,500. Then this is changes in working capital, working note number 1. So changes in working capital is 28,125. 28,125. Fine. 28,125. So next statement is fixed asset 2,70,000 is the balancing figure to bank account, which is purchase of fixed asset. It should be taken to application of funds. Below that, note number 1 is 90,000 current year depreciation. This particular calculation, just understand it clearly, closing balance minus opening balance. But then opening balance, part of that opening accumulated depreciation has been sold, that machinery. So depreciation which belongs to that machinery should be taken off from that opening balance. Remaining is only opening adjusted opening depreciation. If you deduct closing minus opening, you will get what is current year depreciation. So below that investment account, just take down all the information, that is all the entries. So here they have directly given that it has been taken, profits has been taken to capital reserve. See, they have given capital reserve, profit on sale of investment. So normally profit on sale of investment in the investment account you will calculate to P&L. So here it has been transferred to capital reserve. So to capital reserve 11,250. So this is the investment account. Next, provision for taxation account. Opening balance credit side, closing balance debit side. To income tax paid, that is to bank, that is income tax amount paid. How much is paid? 61,875. So remaining balancing figure on the credit side is nothing but to propose provision for taxation, which should be taken to P&L account. By P&L account, you should take down there to provision for taxation. So that is provision for taxation. And final working notice, calculation of funds from operation, opening P&L on the credit side, debit side closing, take down one by one what are the loss, depreciation and provision. Then how much is transferred to general reserve, then premium on redemption of debentures, then repayment of miscellaneous expenditure. When you total it and calculate what is the balancing figure, that is funds from operation, 3,84,750. So this is problem number 7. So with that we have completed problem number 7. So last problem, that is problem number 8. Just refer the June 2018 answer sheet. You just work it on your own first, then refer the answers for what is the funds from operation and what is the different statements, which different accounts which you open. First, just prepare on yourself what is the answer for this problem number 8. Prepare the fund flow statement. Then go to the solution sheet and just check the solution. Whereas you will find it different method they would have solved, like source of funds they would have solved above, like a balance sheet, new balance sheet they would have solved. Source of funds they would have solved above, and application of funds they would have taken below. Whereas we are doing it in the two sides, source of funds, application of funds. Any method is fine. So you just check the answer with that particular material, that is June 2018 answer sheet. So with that we have completed FM, financial management. If you have any doubts from this financial management, you just ask, I'll just solve it. Like if you can ask me through my WhatsApp number, which I saved, which I shared in the first video. So with that, FM is over. Next we will move on to costing. Costing, it won't be like FM. So like costing is basically conceptual. So it will be very nice to like cover all the chapters in costing. Basically I'm so much interested in costing. Like costing is my favorite subject, so you will find it very easy to cover. Like even though the it may take a little bit amount of time, like because marginal costing there is nearly so much of questions in marginal costing, that is decision making. Then in standard costing there is a budgeting, and then transfer pricing. These are the 4 important chapters in costing. So we'll go one by one chapter. We'll just finish off this costing as soon as possible, but seriously it will take time. This compared to financial management, costing has so much of problems in single chapter itself, where I was solving in small videos one full chapter in this financial management. But in costing, what happens is one chapter will go for some 5 to 6 videos or 7 videos. So 5 sums will solve in each video. Just finish after that 5 sums, just work it out. So costing will move in different phase. Like FM we just moved in in the final part of the FM we'll just move a little bit faster, because FM should not take that much of time. Basically the final chapters, only capital budgeting, which I took from in the last few chapters, are very important. This fund flow statement, and one more chapter which I covered is, I think so, capital structure. So these are the different chapters which you don't have to focus on. Capital structure is also important. Fund flow statement is also important. Don't leave. But what you should do is give more importance to capital budgeting, then cost of capital, ratio analysis, working capital management. All these are different chapters where so much of focus is required. So just finish off your financial management preparation, then start off the costing. All the very best, guys. Thank you.